All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live. And once again, as we end out the first trading week of March, we are getting hit with some headlines that literally, when I mean literally, I mean actually literally in the past 5 minutes came out, and it is causing the red that you are seeing. We were going to be red for the day anyway, but we were, starting to not recover, but it was a little bit better than what it was at the worst of sort of that 11 a.m. downside pressure that we saw today. And we pretty much lost all those gains. NVIDIA is getting hit 3% down on the day, 177 down from 182. The S&P 500 down 1.25%. Robinhood down 4%. Bitcoin lost 68,000 for a second, just recovered above. Now it's 68,000. Micron is down 6%. Lumentum is down 14%. Coherent is down 8%. AAOI was up 11%. Now it is down 4% on the day. Red Cat was up 22. Now it's down 4. Rocket Lab was up 7. Now it's flat. Ondas was up 7. Now it's down 5. Across the entire board, Broadcom was pushing 345. That stock is now at 330. You got Sofi right there. That's down 2%. Most of the names that are getting hit are hyperscalers and chips, which begs the question, what the hell happened? What the hell happened? And your boy has a headline for you that's causing this pain. And unfortunately, it has to do with none other than OpenAI. Oracle and OpenAI are stopping a planned data center that they were going to open in Texas. That is the initial headline, and that's why the street's freaking out, because immediately, what do you think? Oh, CapEx spend going down. That means AI revolution not happening. That means NVIDIA's dead, yada, yada. The fine print on this headline is Meta is actually in talks to take this over. So Oracle and OpenAI have scrapped plans to expand a flagship AI data center in Texas after negotiations dragged over financing and OpenAI's changing needs. The collapse talks created an opening for Meta to step in and consider leasing the planned expansion site in Texas. Crusoe is the developer. Now, the interesting thing about this entire story is that NVIDIA helped facilitate Meta's discussions with the developer, said the source for Bloomberg, who asked not to be identified because the talks are private. The shifting plans underscore the complexity of building out AI data centers, which are expected to cost tens of billions of dollars and require cooperation from a wide swath of partners. Now, again, the question remains, why is OpenAI and Oracle not able to come to any level of conclusion on building a data center? Well, there's two things that are cited right here that are causing the confusion. Number one is that there's a different need that OpenAI has on being able to build these data centers, which immediately screams, hey, is Oracle actually going to be able to provide that? Oracle now going red on the day at 154, because if OpenAI has certain types of custom metrics that they're looking for or different ways that they want to deploy compute and Oracle can't really help them get there, I mean, you can't work with Oracle at that point. And it really begs into question Oracle's $350 billion of remaining performance obligations, which also, in my opinion, begs into question, even though it's probably a different partnership that Microsoft and OpenAI have. But Microsoft's RPO, I mean, if Oracle's already kind of reneging on a data center with OpenAI and that RPO is threatened, even if Microsoft is getting a different type of money or a different type of revenue stream, I should say, from OpenAI, the fact is that OpenAI might not be living up to what they said they were going to do. And, that might be creating some false expectations for the street. So that's the first problem with this data center. The second big thing that the Bloomberg article highlighted was financing concerns. Now, OpenAI just raised $120 billion. They have money. So if they have money, maybe that's different and that shouldn't be the same concern. But if there's more concerns around private credit and actually being able to finance it, then that goes different. CNBC, I'm getting a headline right now. I'm seeing what you guys are saying in the chat as well, is saying, no, the plans are on for OpenAI and Oracle. Okay, I don't even know what to believe anymore. I don't even know what to believe in. I mean, you got two big media giants, CNBC and Bloomberg, going back and forth. Bloomberg saying the plans are over. CNBC, I'm seeing the headline right now, existing plans for Oracle's data center project with OpenAI in Texas remain on track. Once again, how do you benefit from all this? You play the volatility, because, I mean, NVIDIA just went down $5. NVIDIA should recover if that headline was fake. If that headline's not fake, maybe NVIDIA stays down or NVIDIA just comes back to where it was at 182. I mean, this is becoming laughable now every single day for how this is playing out. Also, I wonder if the CNBC source is correct, because Bloomberg is citing a very specific negotiated deal between Meta and NVIDIA, basically saying NVIDIA is backstopping a project for Meta to be able to take over that data center so that there's more GPUs to be bought, obviously, for NVIDIA to go into those data centers. Because if that data center was not going to happen, I mean, that would be a material hit for NVIDIA, because they would likely be selling hundreds of thousands of GPUs to that site in Texas. So I wonder what source Bloomberg is using to say, hey, Meta is trying to go for this data center versus what CNBC is using to say, no, the data center is still on. I mean, it's absolutely incredible to see how this is playing out, but these are the headlines that are coming across the screen. Microsoft right there, that's down. Oracle, that's down. You got all the photonics plays that are down. NVIDIA, that's down 2.8. Robinhood, that's down 4. S&P still down 1.3%. We'll probably get some news after hours on exactly what is the truth of what's going on right here. Right now, it's a game of he said, she said. And so hopefully in the coming hours, we get a little bit more information and some coverage on this. But right now, it does seem a bit dicey. Now, S&P inclusion will happen after the bell. It'll happen at 5:15. 5:15. So for those wondering if SoFi, Vertiv, all those companies can get in, it's going to be happening at 5:15. These are the main names to watch out for. You got Vertiv, Marvell, SoFi, Reddit, LNG, Cheniere is still not in the S&P 500. Given what we're seeing with oil, it makes sense potentially for the committee to consider them. Coherent, SoFi, and then Lumentum. So these are going to be some of the big names that we're looking for, but there's a lot of names that are applicable to get in. And at around 5:15, the S&P could pick none of them. But, hopefully we end up seeing some of these names that get in. By the way, because of this headline, Nebius, CoreWeave, Iren, Cypher, they all got hit. Nebius right there down 7%. That one's not getting much recovery. CoreWeave is down 2.43%. Iren, which just diluted by $6 billion yesterday, that's down another 7.5%. So, I mean, you're just seeing the entire market heading into the weekend get hit with a really crappy headline, which now at this point might be fake. Who knows? But Cypher right there down 9.8% on the day. Galaxy's also getting hit. All these data center plays, Galaxy down 10% within a matter of about 30 minutes. I mean, they're already red for the day, but they really started to get red once this headline came out. And the thing that's not red on the day, unfortunately, is WTI crude. Folks, we hit $91 at one point. Right now, we're up 12% on the day, $90.74. This is bad. This is just not good. And we'll talk about the labor market data we got this morning. I did some more digging on how bad that data was. And, you go through the nitty gritty of the numbers. It was bad. Losing negative 92,000 jobs, worst report since 2020. That headline in and of itself is bad. But then you look at the sectors that ended up declining. It was not good. And as a result of that, you're going to start to see potentially a little bit more coverage around the labor market, because this was one of the first reports that might start to wake up the Fed, at least of thinking we have to get rate cuts. But also that momentum is cascading with the pain from oil prices. You also have this headline right here. The Trump administration announced a $20 billion reinsurance program for oil tankers and other maritime traffic in an effort to get vessels moving through the Strait of Hormuz. There's not a lot of ships. Quite frankly, there's not any ships that are really moving through the Strait of Hormuz. We looked at a couple of different videos this morning showing it, but this is the one we looked at. There's just not a lot of stuff going through. And I think it's because, well, you've got a bunch of countries that are afraid and they don't want to have more escalation. They're not taking Trump's offer of being escorted through the Strait. And that's causing these crude prices to go a lot higher. So if you have crude pumping and you have the labor market really showing a signal, think that things are not in the right space, it's just not the right recipe for a bull market, especially if that is elongated, aka if oil stays above 90 for the next coming months and then the labor market continues to show weakness. It might not be a recipe for a bear market because of earnings and rate cuts, and you'll have some things to backstop it. But it also doesn't mean we have to, break out. And what really changes the question is earnings expectations. Right now, earnings are, still expected to produce decent results. But as oil goes higher, it's tough to imagine United Airlines or American Airlines are going to put up those earnings in a meaningful way. Pound right here was at 161 today, 161.45, now at 170, 157.30. It's also falling with all the chip names on that headline. Ondas, that's down 5%. Grab's down 1.86%. Netflix is down 0.2%. SoFi again down 2%. Broadcom, which is really making a good move today, that is down 0.5%. American Express is down 2.3%. And then Google is down below 300 as well. We talked about BlackRock holding withdrawals this morning. It's also not very pretty. One of the things I'm going to focus on this weekend, BlackRock probably deservedly should be down 7% on the day. We'll talk more about them after the bell, but I'm going to start doing a bit more research on private credit. It's just looking ugly. It genuinely is just looking ugly when you start putting the headlines together. And, they're not just fake headlines. These are real investors asking for their money back from these funds. And these private credit funds are like, no, we don't want to give you redemptions. It's almost like that scene in The Big Short where Michael Burry's investors were like, hey, we want to take our money out. And he was like, no. And they're like, we'll sue you. He was like, I don't care. He's like, you can't take your money. And now he ended up being right, which is why they ended up making a lot of money. But it's always a little scary when the custodian of the capital says you're not allowed to get your capital back. It starts to bring up some questions. And unfortunately, I think we're seeing a lot of more questions around private credit. Apollo, KKR, Blue Owl, BlackRock, all of them, Blackstone getting hit on the day. Also, take a look at this chart right here. The gold ETF on Wednesday, saw an outflow of $2.91 billion. This is the largest outflow on gold since November 2016. November 2016. Gold is up 1.62% of the day, and silver is up 2.4% of the day. So, I mean, precious metals also potentially seeing a little bit of withdrawal pressure as people, honestly, I think are rotating into oil and energy as kind of their defense on what's going on. Not to mention, you also have the weekend's events. Trump tweeted this morning that the only way that Iran is going to end this war, or that we are going to end this war, is for Iran to surrender unconditionally. And so it doesn't necessarily sound like someone who's ready to end anytime soon. And if there's some strikes over the weekend, or there's some more attacks, or some more facilities get hit, then obviously the street has to price that in, and they're not going to necessarily be the happiest about that. We talked about these headlines in the morning as well, but just a bunch of bad stuff. Slovakia is going to begin boosting purchases of natural gas from Russia. 0 countries have taken Trump's offer to be escorted through the Strait. Kuwait's cutting oil production at some fields due to storage issues since they can't ship the oil. U.S. Energy Secretary Chris Wright said, we have implemented short-term measures to help keep oil prices down. It may take weeks for Americans to feel relief. Iran state media claims that another ship was attacked in the Strait of Hormuz. You just have so many different things that are happening back and forth that are creating these headlines to obviously run up the prices of oil, but also, risk assets potentially take a little bit of a breather when oil begins to spike and you get this really, really ugly labor market data. Trump just tweeted, what do we got? We just concluded a very good meeting with the largest U.S. defense manufacturing companies where we discussed production and production schedules. They have agreed to quadruple production of the exquisite class weaponry, in that we want to reach as rapidly as possible the highest levels of quantity. Expansion began 3 months prior to the meeting, and plans and production of many of these weapons are already underway. We have a virtually unlimited supply of medium and upper medium grade munitions, which we are using as an example in Iran and recently used in Venezuela. Regardless, however, we also increase orders at these levels. The companies represented were the CEOs of Bay Systems, Boeing, Honeywell Aerospace, L3 Harris Missile Solutions, Lockheed Martin, Northrop Grumman, and Raytheon. The meeting concluded with another meeting scheduled in 2 months. States all over the country are bidding for these new plans. Thank you for your attention to this matter. Well, I guess if the labor market is struggling, maybe Trump is like, well, if we get into a war, we're gonna have to make a lot of weapons, and that'll employ a lot of Americans. I mean, what is going on, man? Goodness gracious, what a week. What a freaking week. Back to back to back headlines that are just absolutely disgusting for the market and for the economy. And, every administration official is telling us this is not a war. I mean, you're talking about quadrupling ammunition. It kind of sounds like we're going to be here for a while, and you can call it whatever you want, but it definitely feels like something that's not going to be ending anytime soon. VIX hits 30, 7 minutes before the close. Wow. VIX was down 15% on the day, spiked 15% in the past 10 minutes. Well, that's what you got, folks. That is how we end the day. Friday, March 6, 4 p.m. The stock market is now closed. Done for the day. We are done for the day. Bloom Energy, my goodness, 15% down on the day. I did not see this one, but makes sense. This one's also high beta growth in the energy space, not necessarily oil and gas, though, and that's why that's taken a hit. BlackRock, that's down 7%. Galaxy, that's down 9%. S&P, we ended down 1.3%. S&P for the week, folks, I believe down 1%. Still in a very, very tight range. You didn't see too much movement, but basically down 1% since Monday. And once again, continues to be choppy. CoreWeave was down 2.5%. Nebius down 6%. Oracle down 1.2%. Microsoft down 0.5%. Again, the main headline was OpenAI and Oracle are stopping their work on a Texas data center, and Meta's taking it over. CNBC came out 10 minutes ago and said that headline is fake. So hopefully in the next 20 to 30 minutes, we'll try to get some updates on if that headline was real or not. But You had Bloomberg reporting that data center was stopping. That's what caused all the chip names to take a hit, including NVIDIA. You have CNBC refuting that now. Robinhood right there, that's down 4%. Bitcoin, 68,100. Micron, your memory names took a hit. Micron was down 7%. SanDisk was down 7%. And how about Korea? South Korea was actually flat on the day, up 0.74. SMH, that was down 4%. As that went red, Celsius was down 2%. Amcor, ugly day for Amcor. Goodness, 6.6%, back to $41. All the chip names just getting hit. Intel wrecked 5%. SMCI down 3%. Archer was down 3%. ETH just below 2,000. The SaaS names, I think, were the only sector that outside of drones, but those ended up falling towards the end of the day, that did okay. CrowdStrike was up. Cloudflare was up. ServiceNow actually 124. That's like a 3-week high. Not too bad. Adobe 283. I think Salesforce got above 200. Yep, closed above 200. Not too bad. Snowflake 180. Datadog up 3%. IoT, they had a great earnings. That one up 20% on the day. So that one actually got the benefit of the doubt. But most of these software names ended up holding up against the semi names, which ended up taking a hit. AppLovin, Apple at 257. How about AppLovin? That stock was red on the day, but still held above 500 too, or at least above 500, which was good. All right, that's what we got, folks. That is what we got. We got a bunch of headlines we're going to be talking about getting into. So we're going to get into all that over the next hour. Again, SoFi and S&P inclusion. I know a lot of people care about if SoFi gets in. We will know at 5:15. We will know at 5:15 p.m. Eastern. Microsoft right there also ended up red on the day after going at 4:13. That's when the S&P committee will put out the results. Maybe a bunch of companies get in, maybe a bunch don't. But we are going to find out in the coming hour. And hopefully SoFi gets in. That'd be nice. But look, even if they do get in and they get a pump, I mean, is that pump even going to last in this macro? Is that pump even going to last? Tanner just said, can you join? Yes, I'm telling Tanner the time it starts, and I'll send him the link, and he'll be able to join as well. All right, so let's get into the headlines. Let's get into all the headlines. Again, 5:15 p.m. Eastern, so we got about an hour and a half for those that want those updates, and then we'll see if SoFi ends up actually getting in. S&P 500 again, basically flat on the day. Also, we will be dropping the podcast today. So after S&P inclusion, I think Steve will be on. We will drop the pod, and hopefully it'll be something fun to listen to over the weekend. But yeah, I mean, these headlines are just annoying. They're a little scary. It's one of those things where it's like you just don't know exactly where things are going to go. The administration's trying to act like everything's okay, and you look back and forth, and it's like in the long term, things will be okay. But in the short term, this stuff is just not good. And, there's not enough data to figure out when things can get actually better. So I think let's start off with BlackRock. Let's talk about private credit, because I think that's probably another thing that got hit pretty hard today. Where was Apollo? Apollo, wow, down another 2%. KKR down another 4%. Again, BlackRock was down about 5%. What about Blackstone? That stock also down 4%. Let's check the year-to-dates on those as those got hit. BlackRock now year-to-date is down 11%. Apollo year-to-date is down 26%. KKR year-to-date is down 30%. So there's obviously an issue in private credit, even if it's perceptual. And that issue is not necessarily being resolved by how the market is thinking of it. And so here's the best tweet I have to kind of give a little bit of a summary of what's going on with this, and then we'll talk more about oil as well. So this is kind of what happened today. BlackRock told investors they can't have their money back. They got hit with a $1.2 billion withdrawal request this quarter. BlackRock only paid half and locked in the rest. This is as per the Financial Times this morning. Blackstone had the same problem. They injected $400 million of their own money just to cover redemptions. Blue Owl did something even worse. They stopped paying the redemptions and they sent IOUs saying, hey, we'll give you the money back later. The reason this keeps happening is that these funds hold illiquid loans. The cash is not there. BlackRock also just run a $25 million loan to zero. We talked about that yesterday. It was valued at par, which meaning got 100 cents on the dollar 3 months ago. JP Morgan said bad news often happens all at once in private credit. This is a $1.8 trillion industry. And right now, the three biggest names are struggling to give investors their money back. So think of it like this. Imagine you went to Bank of America or Chase or Truist or whatever bank you bank at, and you wanted to take out $5,000 for whatever reason. You had to make a purchase for $5,000, and they said, no, you're not allowed to take out the $5,000. You would immediately be like, why? It's my money. Like, I put it in a bank for convenience reasons, but at the end of the day, it's my money. If the bank says we can't give you your $5,000, then you probably start thinking something's going on with the internal finances of the bank. Something's wrong if they can't give me back my money. Well, most banks can give you the $5,000 because banks are well capitalized and they have reserve requirement ratios and they should relatively be okay. But in private credit, if you are an investor who invested in some software company back in 2019 because BlackRock's private wealth credit team told you this was a good opportunity, but you invested at a ridiculously overvalued valuation. To give some context for this, Ramp is at a $30 billion valuation right now. It's in the fintech space. Their competitor Brex raised at $21 billion. They just got acquired by Capital One for $5.5 billion. So when you think of the companies, and Ramp is still private. Now, maybe it's a higher quality company than Brex, but the point is the comparables, if the resulting acquisition or exit event is a 85% drawdown, then you could only imagine if these companies were actually public, if Stripe was actually public and had to deal with a fintech valuation in the public markets, what would happen for that? So all these LPs are now calling BlackRock and Blue Owl and KKR and Apollo for their money back. And it seems like throughout the entire industry, there are issues with the investments that were made, and particularly the underwriting of the due diligence that was done back in 2019, 2020, 2021, when money was cheap and rates were basically not zero, but close to zero. And I guess it seems like now it's time to pay, even though the money is not available to be able to pay for what's going on in private credit. That is, I think, scaring investors. And that's what I think is also kind of causing the pain around fintech, and probably part of the reason why SoFi got hit this year. SoFi down 2%. And, maybe if SoFi gets into the S&P, it's great, but maybe it also doesn't matter if these loans continue to be compared to the quality of loans that every financial institution is putting up. Blue Owl, wow, that was down 5% on the day. That was also down 5% on the day. So that was not a good thing to see in the stock market today, but I think what accelerated the downside, not only across private credit, but the rest of the market, was the jobs data. So let's go deeper into what happened with the jobs data today. Because again, negative 92,000 versus the 58,000 expected. First negative month or second largest negative month since the pandemic. Here's the chart that I thought was the worst in terms of looking at what's going on with the labor market, the tech sector. So overall, employment decreased by 12,000 last month and is now down over 57,000 over the year for U.S. tech sector jobs. It's now nearly as bad as the worst of the 2024 tech session and significantly worse than either the 2008 or 2020 recessions, 2008 being subprime, 2020 being the pandemic, when software publishing, custom computer programming services, IT, streaming services, social networks, software engineering, obviously, computer infrastructure, data processing, all of those jobs put together are having their lowest employment growth basically since the pandemic. This is not good. Why is this not good? Well, not only is it not good for the broader labor market, but these are some of the supposed highest paying jobs in the country. So, part of the way the economy works is that if you're a software engineer in Meta and you make $250,000 a year, you might be able to afford a $20 martini at a bar in San Francisco. But if you don't have that job anymore, or that job is in low demand because of AI or whatever other reason, I mean, it could be AI, maybe it's the general labor market weakness, whatever it is, it's the data showing that those jobs are just not as easy to find anymore. Then, buying those $20 martinis and giving the bartender a $10 tip to be able to make the drink, like that just doesn't happen anymore. And that hurts the bar's expenses as well. So it's this economic cycle that gets hit pretty hard when you have very high paying jobs that don't start paying anymore. And it begs the question, do we change earnings growth on a lot of the companies and the expectations that we have for earnings growth for these companies? S&P 500 right there, 672, down a little bit more after hours as well. Wow, Democratic Senator Mark Kelly proposing suspending a 18-cent per gallon federal gasoline tax through October in bid to reduce consumer costs. See, this goes back to the compounding effect of all these things happening back and forth. That 18-cent per gallon federal gasoline tax, even though people don't like paying it, that's income for the federal government because they get to make money from those taxes and they get to use that money and allocate it throughout the broader economy. If we have to now cut that just to ease the costs on consumers, Also, I think Trump must be hating this proposal because it's a Democrat who's trying to make things more affordable by proposing this idea. And, Trump is trying to convince everybody that everything is affordable and that we're okay. That's where you're just going to have a lot of things go back and forth and potentially compound on each other. Let's get an update on oil because obviously it has not been the best. And, it is starting to bring up a lot of questions versus answers on how long this war is going to last.
Oil to $150 per barrel. There's now 76 million barrels of oil in the Gulf with nowhere to go. That's according to JP Morgan, which said the market is, quote, shifting from pricing pure geopolitical risk to grappling with tangible operational disruption. The Brent WTI spread narrowing today with, again, Capital's John Kilduff attributing it to Brent getting a stranded asset discount while WTI gets an availability premium. And European natural gas jumping more than 60% on the week. We started to see LNG tankers headed for Europe U-turn and instead sail to Asia. The spread between the two prices is increasing in order to attract more cargo to the Pacific. Finally, gas oil, which is European diesel, hitting the highest level since 2022 and seeing its best week back to 1981, up here 53%. Guys?
In terms of offsetting the pain of higher oil prices around the world, Pippa, I mean, India is now allowed to buy some more Russian oil, which had been previously sanctioned. So those sanctions lifted a little bit. How much more sort of cushion is there out there in terms of allowing some more supply getting to where it needs to go?
Well, clearly the administration is watching this very closely. We also had a couple of hours ago the announcement of that $20 billion reinsurance program to try and get traffic moving through the strait once again. Then, of course, there is the option to tap the SPR, although thus far officials have said that that is not on the table. We've also seen moves from Japan suggesting they might tap some of their reserves. China also now putting a limit on exports of petroleum products. So it seems like every country is now trying to see what they can do in order to stem some of the upward price pressure. But I think what's going to be really key next week is we're going to see whether this moves from a logistical issue to more of a structural one. Right now, given where Brent is trading 6 months from now, it's clear that the market is saying this is a short-term issue, but the clock is really ticking. And so next week will really be key for whether or not this can be a short-term blip or a longer-term issue that becomes more structural.
All right, I'm going to put a poll in the chat, see what people think. Look, obviously oil getting to these levels is not good, but at what point do people think, if you even think this is possible, that we are going to get some version of a taco? Like at what point do prices get so crazy on oil that Trump steps? I mean, are we really going to 100 a barrel on crude? Are we going above 100? I don't know how Trump's going to be able to defend that. And I don't know if he's going to think the war matters that much if that's where if the rising prices start hitting Americans the most. So let's do a poll right here. When do you think we potentially get a taco on oil? So let's do 100, 110, 120, or now at 90. I think he'll let it get to 100. I think above 100 though. We get to that 110 level, which again, it sounds even crazy to say. But then again, when oil was at 50 last month, did anyone really think it would be a 90 a month and a half later? So it's like, is it crazy to say it goes up another $20, especially if production continues to stop? And if the administration takes over this or starts tapping into the SPR, Strategic Petroleum Reserves, I mean, that's only going to be net negative long term, even if it helps a little bit of short term relief. So I just, it's a really, really crappy situation. And again, oil affects everything. Like as I get older, the more I realize how much oil affects absolutely everything. Buy a plane ticket, well, oil's factored into that price. And if the price of oil goes up, it's really hard for United Airlines, which already has horrible margins, to try to make more money. UAL right there, down another 3.5% on the day. What did Trump think was going to happen when this happened? Well, that's also, I agree. It is a bit confusing because it seems so obvious now, right? That if we were to actually launch this like massive military operation and all these countries would start going back and forth and you would have all these missiles getting intercepted and then some of them landing on refineries, that it would cause this type of chaos in the oil markets. Now the price is obviously reflecting that. But maybe they thought the operation would be able to happen without this taking place, which in case means that I guess they didn't weigh all the circumstances of it. It's just now it feels so obvious. It's like, dude, there's a lot of oil that goes through that Strait of Hormuz. We just attacked the country that's responsible for it. And maybe for the right reasons. That's more of a political topic. But economically, the reality is what's happening here with AI. I don't think he cares about the midterms anymore. He gave up. I mean, who knows? It's hard to speak for him. If he did give up on the midterms, then it definitely feels like he would start taking actions that are irrelevant towards the midterm success, which is what this war feels like. But then again, maybe he thought it was the most important thing to do. I think there's a lot more questions than answers on like the logic behind why we did this. But the oil markets don't really care. They're just seeing the pain that we're getting. Again, S&P 5:15, folks, 5:15 p.m. Eastern. So if you want to come back in an hour, feel free to come back. But 5:15 p.m. Eastern, we will figure out what happens. This was also something I want to bring to everyone's attention. Jeff Green, who just bought $150 million of Trade Desk, he gave 3 reasons why. He wrote a letter. He said, Amazon's basically not going to beat us. Wall Street is wrong about software. Chatbots will increase ad inventory. And TTD's AI opportunity allows them to find 20 million different ads per second that can be done or deployed across a host of the clients and partners they work with. So I think it's worth reading to see if you think there's any level of relevance to a CEO who, I mean, I think this is the first time in like a while they made that big of a purchase. But it also could be them just trying to, make a $150 million purchase to convince people to buy the stock. The stock is down from 150 to 1.20, now back at 29 after this purchase. Let's hear from Ed Yardeni and see what he has to say about crude and the implications on the broader economy.
You're going to see some tankers going through the Strait of Hormuz. Until we see that, this market's going to continue to be under pressure because the price of oil is going to continue to go higher.
Cameron, that's the most important chart to keep an eye on for the next days, weeks, and who knows how longer, crude oil?
It's all about degree and duration of the jump in crude oil, because if crude oil quickly reverses, that's something that is not going to impact U.S. earnings. If it stays high in these levels, that's where you could see the transmission mechanism actually impact earnings. And the reason why 2022 was so weak is because we were cutting GDP estimates and we were cutting EPS estimates. All through the last 5 months, as markets have been flat, you've actually seen EPS estimates get raised for this market. So a big question going forward is, has there been enough disruption that people start cutting forecasts?
Some had already thought that forecasts were too high for the back half anyway.
Yeah. I mean, if you look at the estimates for this year, they're at $314 a share. It prices in nearly 200 basis points of margin expansion. But look at 27, $363 a share for 2027 earnings. That is pretty aggressive. And that would mean that we get 3 years in a row of mid-teens kind of earnings growth.
Brian, I kid you at times about your 30 years of experience that you always let us know about, but I want to lean on it now. I want to lean on the experience you have at looking at markets at times like this, and how, just like I asked Ed, it informs your own view about what you would advise clients to do.
It's an honor to be on with Ed, and we were talking off stage, and collectively, we've seen markets like this before. And, what we believe is that we're heading into an earnings-driven market, which we said heading into this year was going to be more volatile. But if I go back and I think of a time like the commercial bank crisis in 1994, when the Fed was at a conundrum, if you remember, are we going to raise? Are we going to cut? And that really ushered in Greenspan's irrational exuberance speech, which ultimately was in 1997, but ushered in Goldilocks in 95 and 96. And so that was a very reactive time. The Fed was in a really, really tough spot. Now, the Fed's in a tough spot here, too, I think, with respect to measuring the dual mandate.
The Fed's in a really tough spot. We didn't listen to Fed President Daly this morning, so let's pull her up. But with oil going up, there's no way in hell they can cut rates. They just can't do it. There's literally no logical way they can justify cutting rates into obvious inflation that will happen. This is not like tariff inflation anymore. This is like, no, prices will go higher if oil goes higher. And that's an issue. But the labor market is weakening, obviously weakening. So based on the job report that we got this morning, which is contrary to the previous 3 jobs reports we got, which the Fed said labor market's not an issue. So it's almost like, how do they navigate that dual mandate if oil prices continue to surge, which is an issue for inflation, but the labor market continues to go down, which is an issue for stimulus? It's tough to cut rates into that environment.
So what's the way to think about this? A blockbuster number in January and now a blockbuster negative number in February. Average the two, move on.
Average the two and keep watching, because there was always going to be, well, first we had a strike, we had snow, we had population changes, benchmarking.
But just to be fair, you didn't have snow in San Francisco.
No, we
had snow
did. We
out
had
there. Very jealous of the weather.
We had a tiny little bit of snow
really?
on Mount Diablo, and everybody celebrated, and then we went back to wearing shorts. So that's how it works. But seriously, you know, the job numbers they're not a clear read of what's happening, but they are also not a wrong read. You know, if you look at the sentiment surveys of workers, if you look at firms, they don't say they're hiring. And so the job market is in this low hiring, low firing state, which makes it vulnerable to any changes, including just the ones that come on a regular basis.
Do you feel in general as if the monetary policy should respond to that low fire, low hire situation in the job market by helping it, by being less restrictive?
It's a very different universe than when we have inflation below our target. If this was 2019, if you recall, we did a couple of cuts because we thought there were headwinds, and we cut the rate in order to make sure the labor market is supported, doesn't fall below. But right now we have inflation printing above target. It's been printing above target for some time. So it's really a balance of risks calculation. And I'd hope the 75 basis points we did last year would put a floor underneath the labor market. But this jobs market report has got my attention, and I've long been worried about it.
It was printing above it.
So again, I think she and Moran that we heard from this morning also said that the labor market is now starting to get their attention. It's just the question of if inflation, which is already above expectations, PPI and PCE weren't good over the past 2 weeks, if this oil stuff creates more pain. Now, again, if oil prices start coming down back into, forget the 70s at this point, at least like the low 80s over the coming weeks, there will be an impact on inflation, but it won't be as aggressive. If we stabilize around this level, if the floor becomes 90 or the high 80s, there's going to be an obvious impact on inflation, you know, relatively soon. Average gas prices are already at $3.30. They were at $3 last Sunday. So they are now up 30 cents. You know, multiple people anecdotally have said they've seen prices go up more than 50 cents. I mean, it's just not a pretty situation if that continues to get a bit ugly. Yes, we will have S&P inclusion. That's going to happen 5:15 p.m. Eastern. We'll have Tanner, we'll have Steve join, and we'll see who gets in. Again, I do think SoFi can get in. Are they eligible? Yes, because the weighted average of their market cap has been above eligibility requirements over the past 6 months, even if over the past 3 weeks it's been lower. So I don't think SoFi is excluded from getting in, but it might just be early for them to get in, given the committee usually waits about 1.5 years until you are allowed to get in versus when you actually get in, at least like minimum 1.5 years. And so, you know, we're going to see what that ends up happening. Crude oil, yes, it is over 91. We're seeing that just now. Goodness, 12.3% up. That is green. It's one of the worst days we've had for oil, and or best days we've had for oil, but you know, not good for everything else in the economy in a very long time. XLE though didn't really catch that much of a bid. So market's kind of fading the energy play as the proxy. I mean, look at ExxonMobil, barely up, Chevron barely up. And again, the reason is if you can't sell too much oil, then these companies can't make that much money. So the price of it does need to neutralize that a bit, but also the reasoning behind oil going up, which potentially is it can't get distributed across the world. You know, that's not good for all the oil companies. LNG, I think it definitely has a good shot to get in. Cheniere, this company's been public for a while, right? Or am I wrong about that? When did Cheniere go public? They've been public since, 1994. So year to date, these guys are up 30%. Big play on natural gas. You could imagine the market also think this goes up. Gas is $7 in Cali. So I got a couple pictures from some friends today. I didn't see $7, but I saw $5.90. One of my friends texted me $5.90 in LA. 7 is kind of crazy, but I mean, it's getting up there. It is indeed getting up there. Again, 5:15, we will find out what happens with the S&P. But until then, we're going to see if these companies have a chance to get in. This is the Bloomberg headline that, again, is being said is fake news now by CNBC. But I'm trying to see if we can get some more coverage on this. But this was the initial Bloomberg reporting on the Oracle Openai data center news that really sent markets down towards the end of the day.
This is Stargate. Remember, it was just yesterday Brody Ford here at Bloomberg reported that Oracle was planning to cut thousands of jobs as it was dealing with a cash crunch from a massive AI data center expansion effort. And now a new report out by Brody Ford, Ed Ludlow, and Dina Bass saying that Oracle and OpenAI have scrapped plans to expand that flagship AI data center in Texas after negotiations dragged on over financing and OpenAI's changing needs. Ed Ludlow joining us right now. Ed, give me some more details on this. What's going on?
Yeah, so it's the Abilene site. You know, there's an agreement already in place to do 1.2 gigawatts. And what we're reporting is that Oracle has decided not to proceed with the expansion to 2 gigawatts. At the same time, our understanding from sources is that Meta has come into the equation and is negotiating in early talks with Crusoe, which is the developer of the site, to be the tenant, to take on, to lease that capacity of the planned expansion now that Oracle is going to walk away from it. What is interesting here is that we also understand that NVIDIA made a $150 million deposit or payment to Crusoe to ensure that whatever happens in that next phase of expansion in Abilene, it is their compute, their GPUs that power it and not AMD's. So a lot of moving parts here. When we broke the story, you saw Oracle go from reasonable gains to now pretty firm negative territory. What I would say is that Oracle has a broader 4.5 gigawatt agreement with OpenAI. That's very much intact. They're proceeding with other projects. This is just focused on the Abilene, Texas site. Yeah. And so we will see whether Meta will come in and take on that additional capacity as it expands. But our understanding is there were some issues with how the site was operating, some financing issues, and also OpenAI's needs have changed. And you see all three of those names moving in reaction to this reporting, Romain.
Now, again, CNBC is reporting that nothing has changed between OpenAI and Oracle. So it's like that guy was saying, nope, things have changed. We have sources that are saying NVIDIA came in, they made sure Meta would get the deal, and they're confirming that Meta is going to use their GPUs to power the data center. I mean, you've got a lot of stuff going back and forth. But I think the takeaway here, whether the news is accurate or not, and hopefully we find out over the weekend for sure, is the volatility that these names have in relationship to the headlines. I mean, they are just so unbelievably sensitive when this stuff plays out. NVIDIA right there fell literally 3% right at the close, about 20 minutes before on that headline. Yeah, 5:15 p.m. Eastern on the S&P. So about 45 minutes from now, we will. It's probably going to be at like 5:20, to be honest, because the S&P website, I guarantee, is going to crash, and we're not going to know. But around that time, we should have an understanding. Ori, thanks for the super chat. Pouncer has been looking excellent over the past 10 days. Is that related to the war with Iran? Yes, in my opinion, that is the only reason Palantir is continuing to catch the bid. So again, software's rebounding, which is good, and that's helped Palantir, but Palantir's rebounded way better than the other names. And that's pretty obvious in my opinion. I mean, the market is seeing them as a beneficiary of their software being utilized in the war right now. And when these things happen, we've seen it time and time again over the past couple of years. Geopolitically, Palantir is involved, and the market remembers that that's probably why they get a premium as a software company that is really important when this stuff happens. Palantir right there, 157, up 3% on the day. So again, software had a decent day, but towards the end of the day, some of this stuff sold off. The Robinhood Ventures Fund down 16% on the day. All I can say is, and I said this as soon as the Ventures Fund went live a couple weeks ago, which is that I don't know if the appetite to invest in private companies when things are super cheap already in the public markets. Like, you're not going to tell me that the Mag 7 are expensive, but Stripe looks super attractive at $160 billion privately. And then B, you've got crazy geopolitical headwinds. Like, it's just not the best time to IPO a fund. Now, granted, they kind of had to do this because these companies are ready to go public, so they want to step in and be the beneficiary here. But that doesn't necessarily mean the value of the fund is going to be received that well by the public if we're not in an ultra bull market. I mean, that's really when these products get to shine. Same thing with SpaceX. If we start turning bearish because of oil over the coming months, that SpaceX IPO might not easily get that $2 trillion valuation that it's looking for. So, I mean, all of this has started as per last Friday when that first attack went through, and we are now living in that new reality. A lot of you guys in the chat are saying at around 120, 31% of you voted, 100 or 29% of you voted at 100. We might get a taco on oil. And what would the taco look like? I think that would be Trump just saying, basically, even if he doesn't exactly admit it, that we're not going for regime change anymore. Because that's the only way I think you can meaningfully taco out of all this and kind of go away. I mean, think about every crazy thing that Trump has done over the past 2 years. He's tacoed. Reciprocal tariffs, tacoed. Greenland, 10% tariffs on all the EU, taco. This is not the easiest thing to taco out of because it kind of started some shit. And although, as this report came out by the Financial Times, the U.S. is looking to lend $200 billion of capacity to underwrite insurance policies today, that's still just not enough to get the market to potentially think that things will be different. And the worst thing is, let's say Trump gives up on the regime change and is like, all right, I'm done. We're not doing any regime change. Okay, but now the Middle East is left with a lot of shit that ended up happening. And if Trump's not going for regime change, I would probably imagine their partner Israel is going to go for it, as they have clearly said that, you know, they need to get rid of the current regime that is in place. And so just any way you slice it, it's just like, am I being crazy, or is it hard to see this thing ending anytime soon? Unless the U.S. just absolutely annihilates Iran and immediately instills this new regime, which I don't think you do that without boots on the ground. I just don't think that happens. So if Trump's not changing his mind about this, and if we're not putting boots on the ground, which probably would accelerate the process, but, you know, I don't think any Congress member wants to vote for that actually happening, then we're going to be stuck in this chop for a while. Yeah, exactly. Not to mention, Iran's not motivated, no matter how, you know, that the reason we pumped on Wednesday as well was that New York Times article that said Iran secretly called Trump and said they wanted to negotiate to end the war, and Trump's considering it. And like that got the markets kind of calmed down a little bit. Based on the headlines we got over the past 48 hours, Iran's not backing down. They'd rather die trying than negotiate at this point. And, you know, I think that's creating continuous concerns about how this is going to play out. Let's hear from the professor and his thoughts on what's going to go on with oil and the broader markets.
I mean, that would be if we do get that, that's a 70% increase in price. And that will set, I mean, I think gasoline is set to soar in any case. So I think there are headwinds.
Trump and Rubio live. Let's go to them.
Also, the development of the individual that student athletics provides. I mean, look, if you can show up at 6 a.m. in the morning every day for a lift, you're learning one of the most important lessons in life. 95% of life is showing up where you're supposed to.
Okay, they're talking about student athletics, not Iran, but I'm going to let it play and see if we get any details outside of student athletics.
Supposed to be on time. These are extraordinary lessons that people are gaining. Two more things that people don't think about: unity. Few things in America unify us anymore, and one of the things that does is college athletics. In particular, I can just the experience of a Saturday, and I was about to say a Saturday in the South, but I don't want to discriminate against the other conferences. I'm sure it's true there too, where communities get together, people don't agree on anything else except that they want that home team on the field to win, and it's
Sorry, I was muted. I was saying we'll go back to the professor because I'm sure we'll get some clips if Trump and Rubio start actually talking about Iran in any meaningful way. But I didn't know they were doing a Saving College Sports roundtable, and I think Trump just said he was going to sign an executive order for this, so we might not get any information around the war if that's what they're doing here.
Now, your other guest thought that the tax refund might offset them, but I think that the oil shock actually could be bigger than what we get on the refunds, which were well advertised, and some people have probably already maybe spent their extra money. So I wouldn't be surprised to see a correction in the market. We haven't had one for a long time, and I mean, that would be, we're not even in the pullback zone yet, which is, 5 to 10%. Correction is 10 and more. I don't think any bear market is coming. And by the way, I mean, if we get a breakthrough, we would get a coiled market spring upward. But trends look like this is going to drag on a lot longer than I and the administration had hoped.
Oil matters more than everything else. That's what I hear you saying, correct?
Yeah. In the short run here, oil does matter more than anything else. The price of gasoline is probably the most visible price of any price in the consumer basket. We're in a midterm year. Politicians are going to make an awful lot of it one way or the other. The Democrats themselves didn't like this war. They're going to blame the high price on gasoline on Trump. So there's going to be a lot of fighting back and forth on this issue. And, it's from what I've talked to some oil experts, and the shutdowns, what is going on in the Gulf, what is going around the world in terms of shipping, it's cannot be fixed overnight. It's going to have some lasting effects, at least in the near term on the economy. In the long term, I'm as bullish as ever. So don't believe that. But I do think that what I see short term does worry me.
Look, I agree with that. And I think a lot of us agree with that. In the long term, it is hard to be bearish given all the arguments we have spoken about over the past couple of years at this point. In the short term, if these oil prices don't calm down, I mean, this is not theoretical or speculative, like, oh, well, the tariffs cause inflation. It's like, no, this is oil. This is very simple. If oil goes up and stays up for a long time, we saw this in 2022, 2023, inflation persists. It's like, it's not that complicated to understand. The question is, if inflation does persist as long as it could, does that reduce corporate earnings? And the market's been really resilient. Companies have put up some of the best earnings they have put up in the past, basically, couple of decades. I mean, Q4 was one of the best earnings we've had in history. So at what point does Microsoft say, maybe we're pulling back spend, or we're seeing customer appetite slow down? At what point does Meta say advertising slow? Like, when does that stuff really hit the fan? And are stocks priced for it? That's the other question. We constantly complain about the PEs on these names being too cheap, but if the E's start going down, the P's start becoming too expensive in terms of the prices. And I think a lot of that's ultimately dictated by oil. Is Russia giving Iran information? Yes. A U.S. Department official confirmed this morning to Newsmax that Russia is providing Iran with targeting information to attack U.S. troops and military assets in the Middle East. So you do have that part of the angle. Besant was just on Fox Business. He said the world is well supplied in oil. So Besant is basically saying to not worry about it. He's live right now. Let's pull him up as well.
Our investment careers, the best investment you made was looking to the other side. And the other side here is that once this is over, then oil prices are going to be sustainably lower and in a safer position for years, if not decades to come. So I would encourage people to look to the other side of this.
The president's going to be right. You're going to go back to $55, $60 a barrel. There's no question about that. I mean, some of these numbers, we're doing 13.6 million barrels a day. I mean, the president's policy back in, Trump 1.0 of drill, baby, drill, which he announced in 2015, for heaven's sake. It just unlocked this fossil fuel spigots. It was an act of genius, Here's another one. I got one for you. Committee to Unleash Prosperity. Listen to this. We are producing 24 million barrels per day in oils and liquid fuels, more than Russia and Saudi Arabia combined, Scott. All right. We've got, listen to this, 110 billion cubic feet of natural gas per day. That is as much as Russia, Iran, and communist China. Here's my point. Can you get a bunch of ships, tankers, through the Hormuz, through the Strait of Hormuz? The soon as you do that, as soon as you get that done, the world confidence will return, and we'll go back to the basics of oversupply and demand, and the prices will drop. How fast can you get the ships through the Strait of Hormuz? I ask you, Mr. Treasury Secretary.
Well, again, Larry, we're going to have to see. We will await to hear from CENTCOM, and in terms of when they think safe passage is possible. But we've actually seen some Iranian vessels go out. We've seen some Chinese vessels go out. So I think that this could be a matter of, I don't know whether it's a week or 2 weeks, but we are on track to get this solved.
Scott, as soon as you get it done, I'm telling you, it's going to be like magic. You know that. You're a market-oriented guy. As soon as you get it done.
Well, I mean, Besant is saying as soon as this is over, oil will stabilize. I guess the question is, when exactly do we think it's going to be over? Like, yeah, if it's over, things will be better. But if this is not over for a while, it might not be better that soon. Steve.
Hello.
Thanks for being on. How are you?
Good. How are you?
I'm good. You've been investing in the markets for a while. You've seen a lot of different markets. I mean, you know a lot about oil and gas. What is your take on crude at a 52 high, passing 90 for the first time since October 23?
Yeah, it's a few things to unpack here. You don't want crude at 90. You don't want WTI going up. You don't want Brent going up. I mean, natural gas is still somewhat low. But the problem that this creates in the marketplace is if this stays high for the next 2 weeks, you know exactly what data is coming out on, I think, the 16th or 17th. You got CPI. And what comes out with CPI? Consensus for the following month. Following month is March because they're reporting February. You don't want that consensus number to jump to a 3 handle or even higher. You just don't want that. Now, I don't think it'll jump to 3.5, 4, but I think it will increase if this is not resolved. And then you run the risk of the following month it jumping to 3.5, 4, because as oil prices go up, input prices on manufacturing go up, transportation costs go up, and that is a very sticky route for inflation. You want that low. Now, as far as the straight, I think it gets resolved potentially over the weekend, if not next week. I do not think this is going to be an elongated thing, only because 20% of the world's oil flows through there. The largest recipients are China and India, and this is really impacting China. I believe that they import 90% of their crude. So this is having a very large impact on them. We just got the data that they are no longer expected to grow GDP at double-digit amounts. I think it came out 4.5%, 5%.
Yep.
So they're going to feel this. There's a deal to be made, and eventually Saudi Arabia is going to have to get involved, as much as they probably don't want to, because they can only send a certain amount up the other side into Europe. There's no outlet from Europe across. So it impacts a lot.
So would you say, usually when the markets fall and I ask you, what do you think? You say, I don't care, because you have a very good long-term mentality. And I'm sure you still don't care about the long term, but is oil something everyone should really care about?
Absolutely. Everybody should care about oil.
Why?
Because the global economy runs on oil. The keyboard that you are typing on, the cell phone the person is watching from, every single thing that you touch is a derivative of oil. And when oil prices are lower, you're likely paying a lower price for those goods because the input costs across the board are lower. Oil is the most critical commodity.
What about olive oil?
I mean, if you ask me, olive oil is very important.
Yeah, it really does feel like this is getting a lot more serious. And, whether or not you think the war is going to end soon, whether you think the war is justified or not, it seems economically markets don't care. All they care about is the demand and supply of oil. And if there's way more demand than supply, these prices have to go up.
Yeah, because look, if you close that off, if that becomes a choke point that does not open, then 20% of the global supply gets disrupted. At some point, you can't outrun that. A couple of weeks, you'll be okay because you're in an oversupply. But once that oversupply starts to dwindle, you see prices really shoot up. I mean, think about what happened during Ukraine, Russia. You saw 140, 150 because of this. Now, that got right-sized, but it took a while to get back down to 80, and then it took even longer to get back down to 60. The last thing you want is creating a position where your oversupply gets stripped away, and now it's constrictive. You just don't want that. You want oil between 55 and 65. That is a sweet spot for everybody. And then the bigger thing that people aren't talking about is if the consensus estimates for inflation increase over the next 2 months, what happens when Kevin Warsh takes the helm?
He can't cut rates.
Now is the Fed, is they're back against the wall where you no longer get 2 or 3 rate cuts this year? Is it where they have to wait until the fall to figure out what's going on and if they can even cut?
Wow, Basent just said we may unsanction other types of Russian crude oil.
Of course.
I mean, dude, talk about Russia being the winner of all this.
The fuck are you doing? Not you, Amit.
No, I know. I understand.
Fucking Connecticut played not knowing where the fuck to go. Oh, fuck.
They have good pizza, though. Apparently, they have the best pizza in the world.
They do. You and I should take a trip up there.
Dude,
although, I do think, I got a hot take, Modern Beats, just as good as Sally's and Pepe's.
But what about Sally's? Isn't that what Dave
Sally's
Portnoy
is
says?
awesome.
That he said it's the best pizza in the world.
I mean, they're up there. I mean, they're legitimately up there.
But have you had Sally's or no?
Yeah, we used to stop on the way to go into Mohegan.
Wow.
Yeah,
Yeah,
my buddy will swear that the Clams Casino Pizza at Frank Pappy's is like the best thing ever invented.
Oh, and so what's number 2 in Connecticut after Sally's?
So Sally's and Pepe's are arguably 1 and 2. They go back and forth in a lot of people's minds. And it's very similar to John's on Bleecker. It's that coal fire. It's amazing. But there's another pizzeria down the block, Modern Beats, that's awesome also. But anyway, we need to see what happens. I think Colo is listening. I think he's correct. And I do think a deal is going to get done. And there's also conspiracy theories growing that all this is somewhat orchestrated between Maduro, between Iran, in order to choke China's supply in order to have leverage for the summit that's coming up.
Huh. The theory is...
this is going to be one big grand deal in the next month and a half, and then everything is going to skyrocket.
But what does regime change in Iran have? I mean, I understand the link there, but you think they would start a war just to choke Russia's...
I'm just saying there's a conspiracy theory forming around that. I didn't say I was forming it. It's not my idea. I'm just saying there's a conspiracy forming that the underlying reason why this all happened sequentially so quickly is because there's a huge summit coming up with China, and this is going to put their backs against the wall because they import 90% of their crude. And now they're going to have choke points, and this is going to really give us some leverage. Who knows? It's an interesting theory nonetheless.
Wow, it's definitely an interesting theory on if that would be the reason for this. This was Basent, by the way, about unsanctioning other oil.
Indians had been very good actors. We had asked them to stop buying sanctioned Russian oil this fall. They did. They were going to substitute it with U.S. oil, but to ease the temporary gap of oil around the world, we have given them permission to accept Russian oil. We may unsanction other Russian oil. You know, the other thing Treasury can do here, Larry, is there are hundreds of millions of barrels of sanctioned crude on the water, and in essence, by unsanctioning them, Treasury can create supply. And you know, we are looking at that. We're going to keep a cadence of announcing measures to bring relief to the market during this conflict. And Larry,
it's pretty incredible the amount of things that might have to happen just to get prices to calm down. Steve, do you think at 100 plus Trump does something serious to get this to turn around?
If this stays over 90 for a while, and when I say a while, I mean a week, something serious is going to happen. It's a midterm year. He can't have this happen.
Do you think he cares about the midterms anymore?
I do.
Like, I want to believe he does as well. But it just feels like if he's sacrificing affordability for Iran, you know, maybe he's more focused on actually stopping Iran from getting a nuclear weapon than winning the midterms.
Short-term pain for short-term pain, long-term gain.
Yeah. Okay, let's transition to S&P. We're going to know in about 30 minutes, guys, on what happens.
Did you hear what I said?
Yeah, you said short-term pain for long-term gain. But I think you're lagging. Can you hear me? Can you hear me? No, you can't hear me. Okay, he has a massive delay. Let me tell him to rejoin. Okay, I'll tell him to rejoin. So in about 5:15, we'll know in about 20 minutes. 19 bucks on SoFi. I know it's up 10 cents after hours, guys. I would not count that as the move. I don't think 10 cents is the move. But still, we'll find out in about 20 minutes. Oh, Steve's going to join from his computer. Okay, cool. So we'll get him on in a bit. Vertiv, let's go through the other options again. So you have Vertiv, SoFi, Coherent, Lumentum, LNG, Vive, MKL, LPLA, Ferg. Not the sexiest names out there. Reddit, I know that's a big one people care about. But still a lot of diversity in the types of companies that could get in. Obviously, most of us just care about if SoFi can get in, but we are going to find out pretty soon. That's kind of crazy though, right? But saying we have to unsanction other types of Russian oil. I mean, Trump made a pretty big deal about India buying. It's kind of crazy, right? But see, this is why every country fights for themselves. Because Trump made a really big deal about India being a really bad actor and not acting in good faith with the United States by buying Russian oil. And India's like, dude, we have 1.3 billion people. Like, I guess you have beef with Russia. I know the rest of the world hates Russia, but we have billions of people that need to eat food and live and survive. We need energy. And now that you're having problems in the oil market, Bassent's like, yeah, the United States might allow Russian oil to start proliferating throughout the world. As soon as you start feeling the pain, you start figuring out how to make things cheaper for yourself. And this is why I never gave India any shit for buying Russian oil, because, like, yeah, obviously as an American, do I want them to do that because it's bad for America? No, but they also have to take care of their own people. And as soon as we start some shit around the Middle East, now we start thinking of buying Russian oil as well. It's just everything is so contingent on this one commodity. And we picked a war in a place that has a pretty big influence on that commodity. And now we don't exactly know when that war necessarily stops here. What's the implied move? There's no implied move on any of these S&P inclusions. Usually it's like 5 to 10%. I mean, that's the average, at least that I've anecdotally seen, 5 to 10% of a boost. Sometimes it's a nothing burger. You know, they don't get in. Sometimes they go down 2 or 3% if they were hyped up to go. But it's not like SoFi's up on the day. So, you know, is it really going to tank if it doesn't get in? I don't think so. Vertiv, was that up on the day? Vertiv was down 3% on the day. Usually if they pump up on the idea they're going to get in and then they don't get in, they lose the pump. But if not, then it might be flat. SoFi and Vertiv both up 0.5% after hours right here. Again, SoFi 8 cents, Vertiv about 50 cents. it will get sold off because of ETFs rebalancing. That could also happen as well. It's very possible for that to play a role. Marvell, yeah, that could also get in today. They had Marvell, I think actually could dump if they don't get in because they had such a big move. Makes you think that maybe that move is part of the S&P inclusion. 18% on Marvell today. But they also had a really good earnings as well. By the way, this was Levitt this morning on the reports of Russian-Iran intelligence. She kind of just shrugged it off here.
I wanted to start you off this afternoon because we have confirmed reports from U.S. officials that Russia is providing intelligence to Iran to help it target U.S. assets in the region. I'm sure this is something that does not please the president whatsoever. Has he spoken to Putin about it?
Well, look, I'll leave that to the president to answer himself. But what I will tell you, John, we don't comment on intelligence reports that are leaked to the press. Whether or not this happened, frankly, it does not really matter because President Trump and the United States military are absolutely decimating the rogue Iranian terrorist regime. We are having me.
I mean, it definitely does matter. To say it absolutely doesn't matter. It's like, okay, but if Russia's actually getting seriously involved here, it's crazy. If Russia is providing intelligence and weaponry to the Iranians because they're getting all this money from oil because of a war that started that has crippled the rest of the world from being able to sell or buy oil, it would just be a crazy loop going back and forth. Russia was always involved. Yeah, I mean, look, for the past week, we haven't really had any headlines about Russia because of, I mean, Ukraine's also been, holding their own on this war. You had a bunch of headlines yesterday about Ukraine shooting down some really good Russian targets, but, now if they choose to get involved, then that creates another dynamic here. Let's see some of this movement after hours. Let's look at a couple different stats. What were the top traded stocks in the options market today? That might also help us see what people are thinking about S&P inclusion. Wow, Palantir got number 3. Palantir hasn't been in the top 3 in a while. Look at that. NVIDIA, Tesla, Palantir in terms of option volume. Then you had Amazon, Apple, Microsoft. SoFi at number 8, I think really means a lot of people, at least today, think there's a shot for S&P. SoFi is usually not in the top 10. AMD, Marvell, that's also in the top 10. Then you have Broadcom, Netflix, Micron, Ondas, Intel, Meta, MicroStrategy, Oracle, SMCI, Google, American Airlines. People might be playing the airline trade through AAL. Yeah, some candidates that could come out of the S&P, Match, Paycom, Pool. You do have a bunch of companies that probably could get hit out of it. The S&P could say we're not going to include any companies. They did that last year, but they usually don't do that. So I think we will get somewhat of a rebalance. Again, at 515, we'll know, but it's probably going to crash. So it might be more like 520 before we find out. So, okay, what are people thinking about the war right now in context of the markets? I mean, because again, the markets are just choppy. I don't even think the impact of the war has happened on the markets. Like the reason growth stocks fell down today is because of these stupid AI headlines about data centers. Like, I don't think we've actually seen the impact because, I mean, SoFi was at $18 last Friday. It's like Palantir has caught a bid because of the war, but like Meta's been stuck between 650. NVIDIA's been stuck in this range. I agree with Steve. I think if we have weeks of oil staying at elevated levels, then we're going to start to see potentially earnings revisions, which will ultimately impact perceptions of these stocks. But it's not like the war has necessarily changed. Rocket Lab was stuck between 65 and 70 last week. This week it closed at 70. Yeah, as the professor said, right? We haven't even had a pullback yet. Like we haven't had a meaningful correction or pullback on the S&P because of any of this stuff. I think the taco's in play. I don't care what he's saying. Grateful for the red personally. I mean, it has once again created more potential opportunities here. I think the credit conditions tightening plus the high earners getting fired is a risk. Yeah, again, that labor market report, it's just ugly across the board. Healthcare was really what was keeping the labor market afloat. If you look at the previous 2 reports, And in this report, healthcare went out the window. Now, maybe it's weather, maybe it's seasonal. Those are all the excuses. I mean, take a look at this chart right here. This is as per Goldman Sachs. Jobs were a 6 sigma miss to consensus estimates. It's just one of the worst reports we've had in a while, and it's starting to make a lot of people question what's exactly happening right now. Yeah, Tanner should be on soon. I gave him the link, so Tanner should hop on soon, and then we'll see. We'll see what happens with SoFi. Steve.
What's up?
Okay, so we have 15 minutes until S&P. After S&P inclusion, all that's done, we are going to be dropping the third episode of Basis Points. So you want to talk a little bit about, without giving away who the guest is?
Wait, you mean how you sold me out?
No, you can't tell the story because then you're going to give away the guest.
No, I'm not. I know I'm not telling the story. I'm just saying. You mean the way you sold me out?
I might have sold Steve out to the guest. I might have.
Like immediately off the jump. First thing out of Amit's mouth. Selling his money out.
Which is a good hint, actually. It's a really good hint, what Steve's saying right here. But, yeah, what should people expect from this podcast?
I think, they should expect a very intellectual, not that the others weren't, but this was definitely, it's different. It wasn't about the markets per se.
Yeah.
It was different. It was really interesting. It was about perseverance and a lot of other things. It was very interesting.
It was not Joseph Carlson, but I think we would be down, right, Steve? To have
listen, I'm cool with Joe. We'd be down.
If he's ever in New York, we would love to have him on.
Yeah, 100%.
It is not a Palantir executive, but it's someone I think you guys will enjoy. Do you think SoFi is getting into the S&P, Steve?
I think Cheniere is getting in the S&P.
Like you actually think they are?
Yeah, Cheniere, yes. I think Cheniere is getting in. I think Vertiv may get in. Those are my two that are like, if I had to put money on it, I would say those two have a very high probability.
Why Vertiv though? Because
I just think because for who cares about the Oracle news today? There's just so much infrastructure bill going forward. Their earnings are just going to keep growing. And the company's going to keep compounding. And it's a good component for the S&P going forward.
I wonder if the S&P thinks they have too much data center exposure already, though. That would be...
They may, but they also have a lot of financial exposure.
That is also... Yeah, I mean, that's a high sector after tech, right?
Right. And after all the private credit scares, they may not want to add more financial exposure.
That is a good point.
So I don't know. Obviously, I want SoFi to get in. I feel better about Cheniere getting in.
What do people think? Put in the chat. Do you think Reddit could get in?
I don't think Reddit could get in. I think it's a ridiculous company, but I think it can get in.
I don't think they would let Reddit just went public 2 years ago. I don't think they would let them get in this early.
I don't understand what the reason to use Reddit is. That's why I say it's a ridiculous company. I don't understand it. There's zero reason for me to ever go on Reddit.
Yeah, have you looked at their numbers? Their numbers are actually very impressive.
Yeah, their numbers are very interesting. I'm just saying, like, from a use case, why would you go to Reddit for anything?
Yeah, I've only ended up on Reddit through search results, and I'll scroll here and there, but I don't actively pick up my phone, click Reddit, and scroll. Like I've never been, but 90 million daily people do.
Huge growth. I mean, they went from 1.3 to 2.2 billion year over year. Huge growth. Can't take anything away from them.
You can say the same thing about X. That's true. I mean, again, I try to tell people X is not a big platform. Like finance people care about it, but the majority of the world is on Instagram. That's the platform that gets everybody.
Well, you can't compare the two. I mean, Instagram's so much bigger than X.
Yeah. Like I think everyone has an Instagram account, like the majority. Most people don't have an X account because X is, again, for like reading news updates that, you have to be interested in
and interacting with people you don't know. Most people use Instagram for pictures of their family. So there's a whole dynamic for sharing family content, et cetera, et cetera. So there's always going to be way more people on Instagram.
Yeah. Elon just tweeted right now about something. What did Elon tweet about? Let's see.
Good old Elon.
He's taking shots at Sam Altman again. So I don't know if you saw the headline, but Bloomberg says OpenAI and Oracle are canceling their data center. Elon said the truth shall set you free. He's referring to them not having the money to fund the data center.
Okay. They just raised $100 billion.
Well, that's what I like. They have the money. Like
they have the money. The question is, when are they going to be profitable? Because they can burn the money that they just raised because that money's going to sit as cash on the balance sheet. The question is, when do they start making money and not have to raise money to fund expansion?
If the headline is true and not fake, again, CNBC saying it's fake, Bloomberg saying it's real. I wonder what the issue is with the data. Like, I wonder if they went up to Oracle and Oracle said, we're going to do this. And OpenAI was like, no, we want this. And Oracle was like, no, we need to do this. And they both were like, we can't do this anymore. And I wonder if that affects Oracle's RPO.
Well, the real question is, does a different company come in and take that compute?
Well, so that was the follow-up headline. I don't know if you saw it, but Meta apparently is gunning for that data center now in Texas instead of OpenAI.
Yeah, it's a nothing burger. Who cares?
Yeah. Either the news is fake and it's a nothing burger, or Meta gets it and it's a nothing burger.
Oh my God, one data center they're quibbling over. Oh no, somebody's going to take the data center.
We got about 10 minutes until we find out. Tanner said he's restarting his computer. His camera's not working, but he'll be on in a second.
You know, for a guy who freaking does this professionally, his stuff doesn't work a lot.
Did Tanner stream today? I don't think Tanner streamed in the middle of the day. He might not have. Maybe his tech was giving him issues all day.
And I think I'm going to go out and buy all new equipment.
You know what? I think you should.
I think I'm going to go get a Shure mic. I think I'm going to go get a real good camera. Yep.
You know how much this mic is?
$700.
Oh, it's 400, not 700, but still.
Yeah, but you need a thing with it, right? For the compression.
Yeah, but that's like 130.
Okay. So I think I'm going to get a crazy laptop for it also.
MacBook?
No, I'm not a Mac guy for computers.
I think it's a good idea though. Upgrading the set, getting all the tech.
I think I'm going to.
Yeah, that's a good idea. It'll still not work. Like mine doesn't work every day, but at least you'll feel like you tried. That's all that matters. I mean, guys, I paid $5,000 for this computer. It's not my fault. Like
I'm very highly considering getting Starlink.
I should get that too, to be honest.
And I'm just going to put out my freaking window when my internet gives me trouble, because then then there's no reason for it not to work. I don't have to worry about something being down outside. It's my own proprietary internet. Like, I'm serious for, even on the 100 MBS, as long as it's down and up, paying $40 a month for it. It's not nearly as expensive as it once was.
There is Mr. Sofi.
How's it going, guys?
What's going on, Tanner?
I'm sick as a dog, man.
I forgot you were sick. You mentioned that yesterday. Yeah.
Today was hopefully the worst day. So, yeah, I didn't end up going live. I couldn't even speak earlier. So,
what do you have?
Just like a regular,
you seem fine,
fully stuffed up. Oh, dude, I feel like shit all day. I mean, it's been awful.
Did you check your fever? Or
no. I don't think it's anything like that. I just didn't want to talk for an hour and a half. But to come on here and celebrate with you guys if SoFi does get in, I'm not necessarily calling for that. I'm not making any bets for this. I'm just going to hold long term. Yeah, I wanted to join for the next 10 minutes, see what happens.
What do you think the chances are?
Well, hold on. First of all, we're very happy you're here, and you are the SoFi guy on the internet, so we're really happy you're here with us. But number two is they're still eligible to get in, right?
Yes, yeah, they are eligible, and they've put in a lot of interesting fintechs recently. that SoFi ends up getting on. But I still think that
we lost you. We lost you for the last 30 seconds. Just repeat it.
Oh, I was just going to say that, you know, I don't know if their chance is really high, like Block ended up getting on, but Vertiv is probably the most likely candidate to get on. I mean, they're almost $100 billion company, growing extremely quickly, profitable. But hopefully SoFi gets on. I think that they're going to get on this year. I don't know if it's Q1. That's my sort of bet right now.
Okay, so you think Vertiv has the best shot. Do you also think the committee might be a little over levered on financials?
There's been a lot of financial ads. Like in 2025, they added Coinbase, Block. What were some of the other ones? I know there was probably 5 or 6 financials that they ended up. Robinhood, yeah.
By the way, we got someone here. It's pretty special.
Oh,
DDI.
Mr. DDI himself.
Yeah.
I feel like if Chris is in the chat, that's all I'm going to say.
They don't know. They have no clue.
Dude, that's the thing. After covering this for the past 2 years, no one knows. None of the employees, none of the executives, they just don't know.
Yeah.
But when they find out, it's like everyone finds out together, it's the one thing where everyone finds out at the same time.
Yeah, like Vlad said, like he found out whenever like the announcement happened. He was like, "Oh, we're in, sweet," and he sent a group message to the company and then said, "You know, now let's get back to work."
Vlad also said he was literally in a meeting with Steve Quirk, and Steve looked at him and he was like, "We got in." Vlad was like, "Okay, good, we got in." But yeah, it's one of those things they don't know about. For those that don't know, Chris Hager, he used to make content on the internet, particularly about SoFi. That was one of the main stocks he has defended over the past couple of years. He ended up getting a job at SoFi because of the quality of his analysis.
Yeah.
So now he doesn't make content anymore, but yeah, it'll be pretty exciting if they can actually get in on this one. I agree with you guys. I think the other companies have a better chance. The thing is, though, about SoFi, if the committee sees them as a fintech that they feel can grow in the index over the long term as one of those compounders, because the reason the index has so many financials is because they tend to be steady compounders that grow, eventually pay a dividend, buy back their shares. Like they're not that volatile. And although SoFi is more volatile because it's a growth stock, maybe the perception of them turning into a fully fledged, massive financial institution is attractive to the S&P. But it's also, they just got eligible like 7 months ago, right? And usually it takes a year and a half after eligibility to even have a chance to get in.
In terms of their market cap, yeah, they've been profitable for quite some time.
Right. Yeah, market cap wise.
Yeah. But they were never entered into any of the other S&P indexes, like in terms of the 600 or the 400. They kind of just skipped all the way up to the 500, and that now that's sort of the goal. We'll see.
Oh yeah, they never were in the other ones, right?
No. And unlike some of the other fintechs, this is a fully fledged financial institution. Like they have the highest bank charter that you can possibly have. I think that might also be interesting for the committee as well.
Okay, so we have SoFi, we have Vertiv, we have Reddit. What's some of the other names I should bring up? Viva Systems, Cheniere. I think those are the main ones. SoFi, Vertiv, Reddit, MicroStrategy. That's always a possibility. All right, folks, it is now time. We will be refreshing. You'll see if any of these stock prices move on the screen. Yeah, Marvell, they have a shot to get in. But now it's time to see. Hopefully it's quicker than normal. Oh yeah, Light, Coherent. Lumentum, that's up 3. That's your first big candle. Vertiv, that's up 5. That's your next big green candle.
Maybe multiple companies getting in this time?
God, I would love Vertiv and Cheniere to get in over freaking at least 100 companies that are in the S&P.
Well, I think there's a high amount of companies that are not even eligible right now in the S&P 500.
Yes, that's also true. SoFi's flat, Marvell's down 1%, Reddit's flat, Viva's flat. The only two that are really making a move are Lumentum and Vertiv. Those seem pretty obvious based on these pumps. But we have to see. SoFi, it's flat. It's not really dumping. It's flat. It's just that initial reaction is what people want.
I'm not seeing anything yet.
Me either. We are only going to confirm when we actually see
We're going to be here till 6 o'clock. They're going to do it on purpose because Tanner feels like crap.
Yeah. It happened one time whenever we were trying to get Hood in. We were here for a while.
I remember.
Amit had to board his flight.
Not knowing if we would get, and then the committee was like, yeah, we're not picking anybody for the first time since 22. I was like, oh, okay. Kalshi has Vertiv at 98%. So the prediction markets are thinking it happens.
Maybe they got in. I don't have the report here, but
yeah,
it was at 70%, I think, earlier.
Okay, I'm seeing some names. It's not confirmed yet, but I'm seeing Vertiv, Light, Coherent, and EchoStar. Is that they picked 4? Really?
EchoStar?
Wow.
It's not confirmed yet. Still looking, but that is not confirmed. That's just one headline. EchoStar is up 4% after hours, though. Vertiv up 5. Marvell down 2. SoFi down 1. EchoStar, huh? That company went public a long time ago, 2008. Year to date, they're down 5%. Haven't got it. All right. Yep. Vertiv, Lumentum, Coherent, EchoStar. SoFi did not get in.
Okay.
Yeah.
The stocks being removed: Molina Healthcare, Match Group, Lamb Weston, Paycom. Vertiv, Lumentum, Coherent, EchoStar.
That's actually pretty exciting, though. Not just for the companies that ended up getting in, and congratulations to the Vertiv shareholders. I know there's a lot of people that have been trying to get me into this name. But that's a lot of very large names that are now out of the way for SoFi. So fingers crossed that they get in 2026. Not calling that for Q2, but it's all year that I'm expecting them to get in with a high degree of certainty.
Yeah, there you go. Unfortunately, SoFi will not be getting in. It's not that much of a surprise. I mean, it is getting hit, though, after hours down 1.3. But yeah, I think people, we've been hoping this for the past, 3-4 quarters. It does take usually a year and a half. So I do think by the end of this year, there's a good shot for them. But Coherent is in. Lumentum is in. NVIDIA just invested in both of those companies, $2 billion as well.
Yeah, crazy.
I'm very surprised they picked those two names. Not to say they aren't great companies, but man, AI supply chain photonics plays getting into the S&P is incredible to see. EchoStar is up 4%, and then the other one was Vertiv, which definitely deserves it. That's up 6%.
SoFi's down 2%. Down 2%.
Which it was down during the day as well, which is, so you would think like there was no hype. And now it's like, no, whatever hype there was, we're going down even further from that. It's kind of crazy, but there you go.
All right. Well, until next time, no party today. Didn't even really expect it, but I didn't want to miss it just in case, because I had sort of thought that Robinhood was not going to get in one quarter, and then that was the quarter that they got in, was the one time I wasn't streaming. So,
yeah. So why'd you come on?
You know what? Maybe next time I'll have to miss it.
No. We appreciate you being on, man.
Oh, Tanner, feel better.
Feel better, man. Next time.
I do know the guest. Very excited to watch. Congratulations, guys.
Yeah, Tanner, I got one question for you.
You feel lucky, Punk? What?
No. Is you being sick going to impact your sleep score?
It has. I got an 84.
Oh no.
No, it's not been good. I can't even breathe through my nose. It's been a problem. But okay, I'm gonna leave. Thanks.
All right. Appreciate you, Tanner. Later. All right.
All right.
That's it. That was the S&P news, folks. Vertiv, Lumentum, Coherent, EchoStar. Those are your names.
So, Amit, I must confess something.
Okay, what do we got?
I'm a degenerate.
What did you do?
Claude is building me something. I had an idea on the way home today, and I am instructing it to build a prediction market aggregator and analyzer, and it is currently building out a few things for me.
Well, you paid $200 a month for a reason, right?
You know, I may have, yes. I may have. It is rebuilding my prediction intel platform with all of the upgrades it suggested.
All right. Well, we talked to the third guest on Basis Points about Claude and AI. So
We did.
I think it's finally time we drop the pod.
So before we do,
okay,
I just want to go on the record and say I've never met this person before. Guy walks in, Amit introduces me to him. He's like, by the way, this is Steve. He doesn't own your stock. First thing out of his mouth.
No, actually, you got it wrong. The first thing I said was, by the way, sir, when your stock was $8, I told Steve to buy it, and he didn't. And then Steve was in the bathroom. Steve comes back, and then the guest is like, Steve, do you own the stock yet? And Steve's like, he has nothing to say. It was the best thing ever. It was literally.
I did well, and I did say in my defense, I did upgrade the stock when it was 50 to strong buy.
That is true.
And then I went neutral when it was like 130.
That's true. I think you guys know who it is. This was a fun one. It was pretty cool. It was exciting, and I think you guys will enjoy it. Ladies and gentlemen, on Basis Points, episode number 3, officially, as the episode just went live, is, well, you know what? I might
Just
as
bring it
well
up.
just play it so you guys can see. All right. Hello, everybody, to episode number 3 of Basis Points. We are very, very honored to have the CEO and co-founder of Robinhood with us here today, Mr. Vlad Tenev. Vlad, thank you for being here.
Always a pleasure. Well, thank you.
Hello, Vlad.
What a welcome.
So this is pretty cool because 2 years ago, March of 2024 is when you and I did our first podcast. And the interesting thing about that podcast is that basically for a couple of years, you kind of stayed out of the public eye. And that podcast was kind of like your first reinitiation to social media and saying, hey, I'm here. I'm a CEO of a company. And for me, everyone was like, who the hell is this kid interviewing the CEO of Robinhood? Like, how is this happening? Past 2 years have been absolutely crazy. The company has innovated in so many different levels. And it, quite frankly, to just be honest, you've become a rock star of a CEO. What has the past 2 years been like for you?
It's been a lot of work. Like, it's just, you maybe would think it would get easier, but you're always trying to at least.
All right, we'll let people watch it. But yeah, Steve, how was it? How was the experience of interviewing Vlad?
Oh, he's great. Super nice, highly intelligent, great backstory. And you can really tell from talking to him. It's different talking to him than listening to him on a earnings call or another interview. Just, this guy is a winner. Like, no matter what he does, I believe he's going to win. And I completely get why Robinhood is looked at the way that it is. And I almost started a position today.
Wow.
I think come next week, I'm going to start a position. After talking to him, I do think that they may be the best positioned company to gain the most from the large wealth transfer that we're going to see over the next 10 to 20 years. I really do.
So this was after the Take Flight event, for those that are asking, and we got to talk about the Platinum card and all the new products they put out and everything. I think the thing about Vlad is, again, for me, it's very personal because it was the second big name I kind of publicly attached myself to. And again, 2 years ago, when most people didn't know who I was, he was the first CEO to give me a shot and really sit down with me and allow me to kind of, show people the skills at interviewing and communication and kind of like get my brand out there. So I think he's really appreciative of the coverage I've done on the company, but I'm also really appreciative of the fact that he's worked so hard that, he's made the call that I had on Hood be as successful as it was. And so it was really cool just that 2 years later, we've obviously talked in the past 2 years, but to sit down on that podcast and like really do it professionally, it was really fun. And we got to sit for about 30 minutes before the podcast and just, talk about life. And I thought that was also fun with Steve because we started talking about video games and all this stuff and, made the podcast so much smoother because we got to just chill.
Yeah, I mean, I want to play GoldenEye against him because we both grew up in that era and it's one of his favorite games, one of my favorite games. And I got to tell you, I am so shocked at how heavy that damn credit card is.
Yeah, it was pretty heavy.
Shocked.
That's actually okay. So let's play some good clips from this because we did ask about his favorite movie near the end. If you go to the rapid fire,
we did, which is I'm a little shocked, but I think you should play the clip where he just drops it on the table.
Yeah, let's play the clip of the card. This one was good. So we'll play a couple clips here and then people can watch it. But look, overall, it's pretty cool. I think the podcast is starting off to a good stretch of guests. We had Josh Brown, Dan Ives, Vlad. Obviously, you guys can tell Steve and I are taking this pretty seriously. We want this to be one of the biggest finance podcasts in the world. And just really, really blessed that Vlad took the time. So did Dan and Josh Brown and gave us a really good first run of 3 guests.
Big thank you to all of them. And before you play the clip, if you're not following Basis Points, I suggest you do. We have quite a few guests in the pipeline, and I think people are going to be very interested over the next several months from now throughout the rest of the summer. There's going to be a lot of good interviews on here.
Oh, yeah, let's see this bad boy. Let's see.
I got to tell you, I'm still surprised at how heavy this thing is.
I believe I looked into this last night. I asked, so here's the gold card, which is also fun.
I love the sound it makes. This is solid gold, folks. We'll see. All right, so this is gold. This is platinum.
Would you say it's annoyingly heavy, the platinum card?
Yeah. Yes. But that's also what makes it cool.
Well, so here's the thing. Nobody really needs a physical card for purposes of practicality anymore. Everyone's got Apple Pay. So I think the physical card is actually, it's more of a style. It's like a fashion accessory at this point.
Yes.
So I think it's no longer important.
It's a brand statement for people.
A lot of people say, well, why don't you just have a little plastic card? I want it to be as lightweight as possible. That's not the purpose of the card. It's like the watches, right? Nobody buys these things because they tell accurate time. There's way better ways to tell accurate time. Yeah, your cell phone is there. So your watch is a piece of jewelry.
Yeah.
It's a statement piece. I think in the same way, the credit card has become a piece of jewelry, a fashion accessory. And I think that's why we spend so much time competing in a category that others don't really compete in, which is who has the heaviest card. So I looked this up. What's the heaviest credit card on the market right now? And what it told me is it's actually this card.
Really?
37 grams. So it hasn't been retrained yet, but this is 50 grams. So twice as heavy as the next heaviest non-Robinhood card.
Yeah, I did not say right and yes throughout the entire podcast. I've got better at that. But overall, it was fun.
And I may have mentioned at some point that I may still be on the wait list.
Yes. Literally after the podcast, he was like, hey, can I get off the wait list?
I was like, hey, do you happen to know anybody that can get me off the wait list?
That was pretty funny. Okay, let's play. We'll play one more clip and then we'll get out of here and you guys can watch it on your own. But I thought this was a good part of the pod, talking about the implications of AI Robinhood and kind of where he thinks this is all going. Can we talk about this idea of investing for a living? Because it's something you mentioned that is a bit controversial, and I think it makes a lot of sense, but I can understand the skepticism around it, which is kind of this idea that work, as it becomes commoditized by agents, means play will become work. And the things we do for fun, or the things that we do as a hobby, like learning about options in the stock market, might become a full-time job. So there's kind of two layers to this question. Number one, do you think people actually can invest for a living? And do you think Robinhood can contribute to that? And then B, a bit more technical, if everyone's using advanced agents to trade, the edge in a stock market is someone knowing something that someone else doesn't, or quite frankly, human emotion stopping someone from selling or stopping someone from buying. If all the agents know exactly what to do, how do you think agents can actually meaningfully trade?
Yeah. Well, that I'll answer both of those. The second question, there's a, everyone thinks that this is going to be all great and my agent's going to be trading for me. And I think what happens with all technology is the early adopters do have an easier time. So, you're going to get some early wins, possibly if you're doing some kind of agentic trading, right? Because not a lot of people are doing it. At some point, if everyone's doing it, it becomes almost like if you're not doing it, you're at a disadvantage. It's kind of like when you're the first accountant that used a spreadsheet in the 80s. It's like, oh man, I can get all of my work done for my business in 1 hour a day. And it used to be 10 hours a day. So, wow, maybe I can just take the entire week off. I have this huge advantage over everyone else, right? And if some people don't do that, some people probably worked less. Other people are like, I'll just have 10 times as much business and I'll have an advantage that way. But eventually everyone kind of figures it out, and then you're back to square one. You're back to a level playing field. So I think that we'll reach an equilibrium for sure. For sure, there's no free lunch forever, right, for everyone. So I think you're right with that. And your first question, do I think people will actually invest for a living? I mean, this is one that I thought would be more controversial, but whenever I go on a podcast, people kind of agree with it.
Yeah.
And maybe the reason is you kind of have one of these jobs, right? Like, how do you make a living? You create content,
right?
And you invest.
And you invest, yeah.
Right. And 50 years ago, if your great grandparents were imagining your life and someone were to tell them, well, Amit is podcasting here and there, and he trades and invests, you'd be like, oh my gosh, you're telling me our great grandchild is unemployed. He doesn't have a real job.
My dad still says that today.
What we're doing right now would not appear like real work to our ancestors.
Not at all.
They would say, oh my God, technology is having this terrible effect of nobody works.
Yeah.
It would either be utopian or dystopian, kind of depending on how you look at it. So it is a real thing because it's already happening. We're here doing it, right?
Anything?
I mean, even my job, technology CEO, didn't really exist 50 years ago.
No.
They'll be like, if they had a peek into my life, what does it look like? Oh, you're just in a meeting room. You have your chalkboard. You're drawing pictures from time to time. Sometimes things get heated and you bang on the gavel or you ring that little bell. There's a little bell on your desk that you're ringing. Yeah. So it wouldn't look like real work. And I think
for those that don't get the context there, I gave Vlad one of those little bells that I bring to meetups like a year ago. And so that's why he referenced that on his desk. Yeah, overall it was fun. It was a great pod. We talked about a lot of different topics. Steve asked about financial literacy for the youth, the wealth transfer, prediction markets. I mean, there was just that. Steve, what do you think? I mean, I don't know if you had a time to fully watch the pod yet, but what do you think was one of his most insightful answers?
Yeah, I actually was slammed today because I took yesterday off, so I did not get a chance to watch it yet. I was shocked at his answer about financial literacy, that how young he said it should start.
Yeah.
I mean, I thought that I was an outcast with what I've been saying, and he made me look like, dude, you're not thinking long enough. And the more I think about what he said, I think he's right. I mean, I've always said that it should be a cornerstone. I think it's more important than English classes and all those classes. I think it's the most important thing that should be drilled in. I'm not saying kids shouldn't be taking that, but I think with all the bullshit that we are forced to take in throughout junior high and high school, I think financial literacy is an annualized course that is more important than everything else because you are going to use it the most throughout the rest of your life. And I think that we need to make that normalized. I really do.
Vlad, I mean, you guys will see on the pod, but Vlad was really serious about financial literacy. I mean, he had some statements about how much we need it in society. We went deep into AI. Again, he has another startup, Harmonic, which is a $1 billion startup around mathematical superintelligence. So when we talked about job loss and how we're going to have efficiencies in the financial system, it's like there's a lot of good stuff to dive into. And we went into how he handles the pressure of being worth $6 billion and building a company that investors think could become a $1 trillion company one day. Like there's a lot of just how do you deal with actually navigating. I mean, he even said at one point the last 2 years have been a blur. It's just gone so fast. Things have gone from 0 to 100 so quick. So I thought it was fun.
And the first thing that I asked him was, how did he deal with the negativity? Forget 2020, 2021. I said, who cares about that? How did you deal with the negativity back in 2010 and 2012 when you just started building this? And there had to have been a lot of people that told you were crazy, and you built a company that can be looked at as a unicorn. And his answer was so amazing. And it's going to really, I think, surprise people. The fact that he said they had a hard job raising $1 million on their first million.
Yeah.
Like when you think about that, he had trouble raising $1 million. And look at what this company has become. I mean, the guy's a killer. I mean, I think anything he's going to do in business, he's going to succeed. He's a straight killer.
It was fun. It was a good one. It was a good one. And I think people enjoy. So look, March is, we don't know if we're going to have another episode in March just because every guest we've wanted to get has been, not only their schedules have been messed up, but I'm going to be traveling to GTC and then we have the LA meetup. So March, I think it might be a little tough for us to get another episode out, even though we're going to really try. But if not, we've got April and May lined up, and we're going to get to that weekly cadence pretty soon for these.
Yeah, this is going to be an off month, but April is going to be very interesting. There's a lot of stuff booked. We have a lot of things we're working on, and we'll see. I mean, we're going to do our best to get another one out this month. We'll see what happens.
All right. We will get out of here. You guys can watch it again. I will link it right here in the chat. Again, deeply, deeply appreciate any of the support for people that watch this stuff. It is very hard to build media and to get people to care and hopefully, enjoy and value the content. So I do not take it lightly after doing this for 5 years when people care and take the time out of their day to put us on the TV or in their car. And, Steve's got into this 5 months ago and he's been crushing it. And he, deeply, deeply appreciates people that show up. So it means a lot. Absolutely means a lot. All right, there it is. Thank you, everybody. I'll be back on Sunday night for the futures. I should be back for Sunday. Steve is probably streaming tonight. I'm going to link his channel as well.
Tonight, tomorrow night, tomorrow during the day.
Yeah, so Steve will be here all weekend. And obviously this oil stuff has changed the dynamics of what's going on in the global economy. We'll have a lot to analyze. We'll see if there's any updates over the weekend in terms of the war. And we'll head into the second week of March and keep going from there.
Sounds good. See everybody later.
All right. Thank you, everybody. Have a great weekend. We'll see you guys on Sunday. Bye, everybody.